To me, the simplest way to think about Bitcoin is that it's gaining traction as replacement for gold. I think that if someone wanted to understand the use case for Bitcoin, and there's many, but they don't have a lot of conviction around something, to me, I could say easily it should supplant gold. And so I think Bitcoin should be, over $1 million over time. And then I kind of prescribing to the view that there's probably a chance that maybe the 4-year cycle is ending for Bitcoin because of the way institutional adoption of that thesis is taking place. And so you have institutional and essentially permanent holders of Bitcoin coming in. So it should be good. So I think Bitcoin should really build upon this 120 before the end of the year. So, 200,000, maybe 250.
Tom Lee begins his analysis by highlighting what he believes to be one of the most misinterpreted market dynamics. Investors are still resisting the rally. Fears of inflation, Fed tightening, and global instability keep many people out of the market even as equities and cryptocurrencies rise. However, Lee contends that bull markets are fueled by this wall of worry. The upside would already be priced in if everyone was in a state of euphoria. Skepticism, on the other hand, makes space for unexpected benefits and significant advantages. Markets rise when people doubt them, not when everyone is all in. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
What's your take on all this?
Well, we're constructive, and I think it is a good sign that many people are skeptical because we believe this is one of the most hated V-shaped rallies, and we are making new highs. And instead of people justifying new highs, we have many people saying markets should not be here because the Fed is not cutting rates or there's tariff uncertainty. So that skepticism is healthy for markets.
Why is it healthy for markets?
Well, it's a sign that there's still price discovery underway. Because if people were all bullish, in the public realm, when everyone's bullish, then it's probably in the price. But when there's plenty of skepticisms and reasons to be skeptical, that allows markets to have positive surprise. And I think that's true of crypto. Bitcoin, is making all-time highs. It's kind of silent, right? To me, the simplest way to think about Bitcoin is that it's gaining traction as replacement for gold. I think that if someone wanted to understand the use case for Bitcoin, and there's many, but they don't have a lot of conviction around something, to me, I could say easily it should supplant gold. And so I think Bitcoin should be, over $1 million over time. And I kind of prescribing to the view that there's probably a chance that maybe the 4-year cycle is ending for Bitcoin because of the way institutional adoption of that thesis is taking place. And so you have institutional and essentially permanent holders of Bitcoin coming in. So it should be good. So I think Bitcoin should really build upon this 120 before the end of the year. So, 200,000, maybe 250. Well, you can't create a bubble because you're buying Bitcoin. So unless you think Bitcoin's a bubble, it's not a bubble, right? I think the crypto treasuries there's going to be winners and losers. Because there is a scarcity to it, actually. So Bitcoin is scarce, and so it's proper for companies to have Bitcoin on their balance sheet over time. And I think banks will, because banks, as Bitcoin really does get recognized in its proper place as how you move money in the financial system, then the banking sector will actually stake Bitcoin as well. They're going to want to own it, And so these treasuries are doing what other businesses will eventually do. But for them to get a premium to their Bitcoin because of how they're executing a strategy, that is the scarce part. MicroStrategy has already proven that their strategy works because they started on August 12th, 2020. Mm-hmm. They bought 260 million Bitcoin. Stock was $13. Now they own close to 5% of the Bitcoin network.
Yeah.
And they announced a huge buy last week, but the stock is 400. It's gone up 30 times. Mm-hmm. So that's truly executed in a masterful way. I don't know if the 50 other Bitcoin treasury companies I don't know how many are. I actually looked at that website.
BitcoinTreasuries.net.
Yeah. And there's like 50 companies. Not all of them are doing treasury strategies.
Right.
But I think a handful will emerge as winners, but not everyone. I think the day the US says they want to acquire 1 million Bitcoin, I think Bitcoin's price is going to go up parabolically.
Right.
Because how is the US going to buy it? They can't, if you know their wallet, you're going to see every buy, and it's going to become a national pastime for everybody because they're a long buyer I think it's going to be easier for them to buy large holders of Bitcoin. Maybe even give tax amnesty, right? That's why they're saying it's tax-free. We won't tax capital gains. They'll do everything they can to try to acquire Bitcoin. Maybe, but MicroStrategy has a sovereign put. They have 600,000 Bitcoin. That's the easiest way to get to 1 million Bitcoin.
Michael Saylor's MicroStrategy and ExxonMobil in the 80s and 2000 are powerfully compared by Tom Lee. The enormous value of Exxon's oil reserves at the time made it one of the largest corporations in the world, not its earnings. The same strategy is being used by Saylor today, except instead of oil, he is hoarding Bitcoin as a strategic asset, regardless of the company's financial performance. MicroStrategy might become the most valuable firm in the world if Bitcoin hits $1 million, not because of its products, but rather because of the strength of its balance sheet. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Bitcoin to me is a proven blockchain that, in my mind, is storing value. And it is, as like Michael Saylor says, it's immaculate. And I do think the simplest way to think of it is it's replacing gold. So at least let's get to 1 million, and then we can see how much further Bitcoin goes. But the world is also grappling with the digitalization of everything that we do. And so we're storing information, and we're tokenizing businesses, and we're tokenizing the dollar. And stablecoins have become so important, in fact, from a policy perspective, because stablecoins are now actually big buyers of treasuries collectively. I mean, that's why you may say you don't have to worry about deficits because stablecoins will buy the debt. Well, that is the ChatGPT moment for crypto, because what's happened is that the first killer app for crypto has emerged that is now seeing widespread adoption, which is stablecoins. And now Wall Street is running to tokenize and maybe even financialize their entire system on the blockchain. But that means they require smart contracts. So they're not fighting with Bitcoin. Bitcoin paved the way for Wall Street to recognize that you don't have to have tangible assets to create value. But if you're going to tokenize what Wall Street does, and you tokenize stocks and real estate, you need smart contracts. And the biggest and most secure blockchain with no downtime is Ethereum. And it's legally compliant, and the majority of stablecoins and real-world assets that have been tokenized are taking place on Ethereum. So to me, that is the macro moment. So in 2017, when I first wrote about Bitcoin, I saw this as the time when Wall Street would eventually come to recognize Bitcoin's importance. So Bitcoin, of course, had already accomplished a lot because it reached 100 billion in network value. And that's why I wrote about it. It's like, if you don't believe in something that gets to 100 billion, like, you got to pay attention to. And our thesis was that Wall Street would start to view this as just digital gold. Well, I think Ethereum is having its 2017 moment now, because now is the time that Wall Street will take tokenization seriously, and it's taking place on Ethereum. So I do think it is the biggest macro trade for the next decade. So let's say, what is the financial system's value in the US, in the real world today? Well, the GDP is 80 trillion, and the financial system is 80 trillion. And that runs on plumbing that, if you're raising risks, are far more fragile. We are using trust vectors that are, in some cases, arcane systems, transfer agents that, rubber stamp things. I mean, look at the level of fraudulent activity on a traditional financial system ledger. JP Morgan, who I think is leading in terms of security for its customers and trying to do fraud prevention, still about 7% of their activity is suspicious. So you can't prevent infiltration. So is Ethereum superior to that? Yeah. I mean, so if you're comparing it to Bitcoin, we're comparing the wrong analog. But for equities, it's really straightforward. Number one, the economy has proven to be incredibly resilient. I mean, I don't think people should take a half-empty take. We've thrown massive tariffs. We had essentially a Cuban Missile Crisis moment, and yet S&P earnings are going to grow 12% this quarter. And there's not any signs really of sustained or a reigniting of inflation. There might be some inflation temporary, but that's very different than inflation dynamic taking root. And the second is, people says that deficits and this current budget are so bad that no one's going to buy our debt. but yields are behaving. 10-year yield was 5%. 2 years ago, it's 4.5% now. And in terms of multiples, I think people are getting this wrong. There's a lot of people saying the market's expensive because the PE of the market should be the average of 16 or 17. Now, I've been an equity analyst for 34 years, and I used to cover stocks. I was a tech analyst for 17 of those years. I never once found an analyst who made money saying you should trade at an average PE. Like literally, you either have arguments for PE expanding, and then you just have to determine when you've hit bubble, or PEs contract when the story is getting worse and there's no bottom. And we just threw 6 extinction events at this S&P 500 in the last 5 years. COVID, then a bullwhip supply chain effect that normally should bankrupt businesses. We had the fastest surge in inflation in 2 generations, the fastest Fed hikes in history. We had tariff Armageddon. I mean, literally a Cuban Missile Crisis moment for the stock market this year. And then the US bombed Iran's nuclear facilities. Each of those should have caused a crash in the stock market. And yet the S&P recovered every time. If we were talking about this as a single stock, we'd say, look, if you threw 6 things at a company and it survived, it should have PE expansion, and yet most people think the market's expensive.
Tom Lee concludes by raising a crucial argument regarding the valuation of markets, businesses, and even entire economies. He clarifies that the global financial system is vulnerable because it still relies on antiquated infrastructure and ineffective, fraud-prone procedures. Not even the greatest banks are able to totally stop suspicious activities. However, the American economy has proven incredibly resilient in spite of all of that. Tariffs, inflation, record-breaking Fed rate hikes, geopolitical wars, and even times that seem like the Cuban Missile Crisis have all been shocks in the last several years. The stock market ought to have imploded several times by all accounts. Nevertheless, the S&P 500 bounced back and continued to advance each time. An important lesson from this is that a market or asset has the right to grow in value if it endures a series of extinction-level catastrophes. Investors might argue that if it were a single company, this stock deserves a higher multiple because it has proven its strength. That's precisely the perspective Tom Lee employs when discussing MicroStrategy and Michael Saylor. Saylor doesn't care about quarterly profits. He's playing a broader game by hoarding Bitcoin as a strategic reserve. History is repeating itself, according to Lee. One of the most valuable corporations in the world for decades, MicroStrategy's Bitcoin holdings, not its software business, might propel it to the top of the list in the current era. Based only on its balance sheet, MicroStrategy might be the biggest firm in the world if Bitcoin hits $1 million. Our understanding of value is changing from physical reserves to decentralized scarcity, from oil to digital assets. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.